So, on today's episode, we would be having a very quick debate about whether or not renting a house is better for your finances and lifestyle than buying a house. And this is because I've been doing some reaction to popular debates, and you have loved it because obviously I'm a debater, I'm a debate coach, and I have a lot of debate background. But also, a lot of people forget that the co host and the co founder of that podcast, Erasmus, also has 11 years of debate experience. But ultimately, he's moved from a Greek biotech into the world of business, into banking, and now he rests in operations where he does a lot of work. And I personally have moved from biological sciences into operations and then sneaked my way into debate where I do my professional work. So you should be expecting a lot of interesting insights on this topic from the two of us. But more importantly, this conversation is for two groups of people largely. First, people who have the capacity to buy a house and are caught in between this wild raging debate online as to whether or not buying a house is better or renting one is better. Because I've heard a lot of people use the phrase renting a house is paying mortgage for free without getting anything in return. Well, there are other people like myself who are also aspiring to buy homes in the future, but we are not sure because I hear these conversations ongoing over and over again, and we are not really sure what is the right thing to do if eventually we end up with the capacity that we are looking for. So Erasmus and I took it upon ourselves, do some digging, do some deep dives with our debate brains and intellectual analysis, scoop around, scatter all the noise, and look in non-biased ways to find out exactly what has been going on. So in this debate, I would be defending why buying a house is better. Erasmus would be advocating for why renting a house is better. And hopefully, in the end, you can pick up some nuanced ideas on how to go about making this decision for yourself. So, Erasmus, are you ready?
Yeah, I was born ready.
Have I done justice to your introduction?
Yeah, I think you did justice to the introduction. I think it's been a long time since we debated, and if there is
Yeah,
anything, a lot of people look forward to what it would look like if we faced ourselves, because we almost always
yeah,
team up to
yeah,
debate. Plus, debate is something that I feel like I always use in my day to day life and also in my job. It
yeah,
feels a bit strange to be doing it on camera and on the podcast, but I
yeah.
do also agree with you that some of the debate reactions which you've been doing have been very, very excellent. So it will be good to talk about these things.
Awesome. Well, I said Erasmus has 11 years of debating experience. I have eight. But just to be clear, I have the professional debate experience on my side. So let's see how that goes around. But yeah, I think what we are going to do is each of us is going to give a submission as to why we support the sides that we support. And then later on, we would have some question exchanges around some of the issues that we raise up. So I'm going to start. And hopefully, I should be able to finish in about 3 to 5 minutes
Can I
on the
take
submission
notes?
that I want to
Can I
make.
take
Yeah, you
notes?
can. Feel free to take notes because I have notes. I'm going to take notes, definitely.
Wow.
I'm not listening to you speak and not take
You
notes and ask some questions of it.
you are serious about this.
I'm a debate
Okay,
coach.
that's
I have to practice my standards everywhere I go.
good, good. I love that.
Okay. So let me kickstart this. I think that there are a lot of conversations around whether or not you should rent a house or buy a house. And obviously, this is mainly for people who have the capacity to buy a house, but are struggling as to what is the best decision to make, and people who are aspiring to buy, like myself. And I want to think about this from the perspective of given that you are going to be paying some amount of money regardless of the position you are on, whether or not you are renting a house or buying a house, there is some amount of money you are going to be paying. I'm trying to figure out a couple of benchmarks to arrive at the best decision to make. First of all, which of the options give you something in return for your money beyond just being able to stay in the house? Secondly, which of these options better hedges against future price hikes? Because we've seen rents inflate over time, right? And the prices change over time. And thirdly, which of these things actually guarantee you stability in a way that I think is much more unique in progressing your life. And this is not just maybe physical stability in terms of a home, but this is also about financial stability in terms of the kind of rates you get when you go out to lend, what things you have to show for to boost your credits and your guarantees that you have. So I think this setup already gives you an insight into the kind of arguments and reasons that I have for supporting this. The first of them is equity and wealth, right? I have to admit that obviously you are going to be paying, probably if today I want to go for a mortgage, which, if people don't know, a mortgage is basically going for some form of loan to pay for your house, right? I want to go for a mortgage to pay for my house after I put in a down payment, and then I have to be paying my mortgage back to the bank every single month, as opposed to paying my rent to my landlord every single month. Obviously, the mortgage prices might be reasonably higher than the rent prices, mainly because, first of all, you are buying an entire house, which is more expensive, but also because you use the loan and you're paying back a mortgage, which means it has some interest rates on it. The main thing I want to caveat here is that if you buy this at a point where, or within a period where interest rates are low, for instance, if I buy my house at a point where interest rates are 2 or 3%, it means that over the course of my mortgage, whether interest rates increases to 15% in the next 10 years while I'll be paying my mortgage, I still pay my mortgage at 2% interest. So that locks in the advantage of buying strategically within low interest periods. What that means is that even though I might be paying more for my mortgage, it means that in the long term, over the longer stretch, I am likely to be spending less on paying for that mortgage as opposed to if I'm renting over that stretch. Because over that stretch, my rent prices are subsequent to inflation. They are also subsequent to all other pricing measures in terms of population increases, pressure demands within a specific geographic location, and all these things that I have absolutely no control over. And so it means that you are likely to end up in a situation where maybe at the starting point, you pay more on mortgage, but I think majority of the situations at the finish line, you pay more in rent than in mortgage. The way in which then I sort of tilt this decision even further in the line of mortgage is the equity that you get in return. Because after paying for that over the 5 year or 10-year period, now I have that asset in my name, which gives me equity, which means that now I have an asset that is money. I can liquefy it, or I can what did I say, liquefy? I can liquidate it, right? And then and then get money in return. But also that means that to the bank, I have an asset that is worthy, that is valuable, and that they can use that to gain more trust in me when giving me any other facilities. So for instance, if I want to take out another mortgage to buy another house, I would come at a much favorable conditions and terms now that I have a previous house that is in my name and that asset that it comes with. So, in terms of equity and building wealth, I think buying a house is a much better option, which is why I have opted for that. The second one is stability, really. And I think that um, when you buy a house, you're obviously stable. I do not think this stability then means you can't access opportunities elsewhere, because a lot of people tend to frame renting as the ultimate thing that guarantees you flexibility in order to move around, access opportunities, etc. I do not think if I own a house, for instance, in Manchester, then moving to London to go and work is impossible, right? It means that I would probably have to put my house up for rent and still make some money from it, given that housing demand is almost always existent and perpetual, and then I can move out. But still, I have that property in my name and the equity that it comes with. And so I also, there are situations where, for instance, if you have a family, that family can be stable while you as an individual moves around and explores, changing jobs, etc. I know a lot of parents who do that. Maybe one parent or the other does that while the other parent is stationary. So I think with the flexibility issues, there are ways of managing it and still getting the better end of flexibility without sacrificing the stability. I think that when it comes to renting, it's very easy to move out, right? Because you are renting, and the impulses to do so is much quicker. But stability when it comes to raising children, having a family, having memories of your child where they were born, growing up there, keeping those memories and reliving it with the children as they grow, I think is a very rare experience that renting does not give you. Finally, I think I mentioned about hedging against rent inflation, because rent inflates all the time. For instance, in Hong Kong, rent is capped at inflating not more than 10% every single year. And that's because the government has even seen it fit to step in to regulate. In most other jurisdictions, rent is not capped, rent inflation is not capped. And so you have people, look at Accra, look at London. There are so many areas where people every single time are complaining that anytime it's time for them to renew their rent, the costs are either up by 50% or something of that sort. Compared to mortgages and buying a house, these mortgages are essentially static for the rest of the period that you're paying. And so I don't pay a mortgage of 500 and then 2 years when inflation goes up, I start paying 700. I think that hedge is really crucial because it means that when you get salary increments in the future, you actually get to enjoy those increments for yourself and for other things that you do, as opposed to spending those increments on rent increases that people who rent tend to have. I think there are some other jurisdictions where you get some tax benefits. I don't think those are universal, so I wouldn't want to argue them. But these are the three main reasons why I pick the side of buying as opposed to renting. First, it gives you equity and wealth. Second, it builds stability while allowing you the room to still enjoy the benefits of flexibility. And third, there are hedges against inflation when you buy that renting does not guarantee or offer. And so these are my submissions. I think it's time for Erasmus to give his, and then we can go a little bit back and forth on it.
No, I think these are very interesting arguments, and I see you do a lot of things in there, trying to reframe, preempt some of the arguments and things like that. But uh, uh,
I'm just trying to be a nice debater.
no, you were not being nice at all. But would respond. First of all, I don't think rent is throwing your money away. I think what I'm going to argue for is why rent gives you freedom and why that freedom is very valuable in being able to determine your life choices and being able to maximize your life choices in the first place. So, what you'd be purchasing on a consistent basis is the flexibility, the location freedom, and the level of financial liquidity. Because what I'm going to also argue and push back on is that as much as your home gives you equity, the cost of being able to translate this into liquid cash would at the end mean that someone who comparatively, maybe for example, invested in the stock market or in a business, most likely is going to get way more. And the existence of that cash flow allows the individual to do the individual who is renting to do much more. So instead of sinking tens of thousands into a single illiquid asset, renters can put their capital into higher return investments and build diverse income streams and quickly also adapt to new opportunities. Renting also shifts the burden of repairs, taxes, and sudden market turndowns to the property owner, allowing for you to live in prime locations for much less risk. Because I think what I want to point out to the audience very quickly is that buying also comes with its downside, with its added cost, which compounds over time. Specifically, also, there is a depreciation effect, even if not on the general house, for the quality of the house, which you most likely get, which means that maintenance cost is likely to going to expand over time. And I think that even if I concede to the benefits that can come in equity, this comparative cost most likely reduces that benefit to the barest margin. So I think for many people who value career growth, travel, entrepreneurship, all of these things which are tied to extra freedom, renting becomes a much more strategic choice as it keeps them mobile, unshackled, and is able to play offense in both their finances and their lifestyle. I think this is key. So first, and I want to respond to a couple of things specifically before I go into some of my other claims. First, you speak about prices, especially the fact that rent prices most likely do go up. However, comparatively, for buyers, they are able to lock in house market rates at very beautiful times, and then like even if mortgage is very expensive in the beginning, most likely they'll be paying it less over time. I'm going to push back against this case but first of all, I just wanted to clarify something. I think that in most instances, a lot of and a lot of times, even when you purchase mortgage, there are several times at which you need to be able to renew it. As there are several times at which it is revisited. Case in point, when with the recent housing crisis, especially within especially within the UK, what a lot of people ended up finding out was that the rate of their mortgage increased or went up. And there are a lot of structural reasons as to why this would happen. If you think about the fact that banks in themselves want to always operate on the current interest rates, it means that if interest rates previously was at 1% and is now at 5%, it is not something that they are going to sit on for 50 years or for 40 years or 30 years during the entire period of your rent in before they are able to get that money. They will necessarily want to revisit it and make sure that it's at fair terms. I think also this is normal within a lot because of this specific risk. It is built into a lot of mortgage plans where you most likely review the contract at a 5-year checkpoint, at a 10-year checkpoint, in order to be able to have that. Also, there's a variety of mortgages which are specifically tied to interest rates, and therefore, even if within that period we see rent prices increase, we also do know that there are a lot of people who we also do know that there are a lot of people that their mortgages does increase. And given that this can vary at any point in time, I think that the effect of rent inflation, or the argument of rent inflation decreases to a huge degree, especially when there is more flexibility for the renter within high periods of rent inflation to be able to scale down. So, for example, you would see that when rent does go up, like you say happens in Hong Kong, most people do have the ability to be able to scale down, move into much more cheaper neighborhoods, new budding neighborhoods, and take the hits on transportation, which is easier, and be flexible and adjust their budgets, or scale down to having lesser space within their houses, and it gives them the flexibility to adapt within that period of time. That flexibility does not exist for homeowners, because in most of those times, what you'd realize is that most people are not buying homes because it is expensive, and therefore it is not very easy to be able to liquidate and be able to move out, which means that as we've seen a couple of times within the UK, when the housing market went down, most people are forced to take up loans in order to keep up with their mortgage payments in order not to lose their house. I think the specific risk of house loss that's mitigates a lot on the argument of ownership in the long run. But I think if we're sticking to the point on prices, this argument still does work. On the comparative, what advantage do renters have? Because recognize that even if mortgages are cheaper over time, coming up with the initial amount of money to for a down payment is very, very expensive. This is something that would require, if you are able to get it, would require either you saving over a long period of time and denying yourself some of the life experiences which you may have. So most people buy most unless you received an inheritance, most people would have to save a lot, which requires a level of delayed gratification. Let's look into what some of that delayed gratification is going to look like. It will look like not taking the trips which you need to take. It will look like not investing in the relationships in which you need to invest in. It will look like refusing to network because going out will mean that buying drinks and living that sort of unsustainable life. It will even look like cutting down on health choices, like paying for the monthly gym, etc., in order for you to get the maximum amount of money in order to make a down payment in most of those instances. That is a commitment that the renter never needs to make in the immediate term. Right, that's a commitment that the renter never needs to make in the immediate term. But even on the comparative, even let's say, because like you said, this is someone who has the capacity to be able to buy a home, which means that within that period, the person, whatever savings they are making, is one which they could comparatively put within other investment opportunities like the stock market. Currently, and generally, stock markets trade right above the rates at which home ownership is able to go to, which means that when these compound over time, the amount of equity which the individual is who rents is going to get at the end of the period is one which has compounded over time, one which has the flexibility which they can move across different investment options like business or higher return stocks, etc., have the liquidity to be able to move it out immediately in case the stock market crash. House owners do not have that level of liquidity. Not only that, the amount which they get at the end of the day is locked up in a structure of physical assets, which without liquidating it, you do not see or access the money unless you are leveraging it to get more loans, which in itself brings some of its other risks. But not only so, maintenance costs over the years, which, like I explained, will then reduce the net amount which you are getting, which means any amount you get is probably one which you've put in a lot of maintenance costs. But then also, it is still subject to the present market conditions, which means if market conditions are bad, you're going to receive far less for the money which you receive. But then also the exit cost, because exiting it means trying to rent solicitors, trying to rent certain professionals, or engaging in a with a number of professionals in order to be able to sell this off the market in the first place. So I do not think you get that return on price. I think the equity which you get is far less. I think the trade-off which you make in terms of flexibility is far lower, and therefore those points do not stand.
Awesome. So at this point, I have a few questions I think I would ask. We can have a back and forth discussion on these questions. But the first one I wanted to push back on is on repairs. I do not think it is black and white as you claim, because there are a lot of instances where people end up having to deal with repairs by themselves, especially if you think about the massive rise of corporate owned houses, where corporations buy houses in bulk in various locations or construct large scale housing projects, and then people have to live in them, where you don't have like a landlord that you have a personal relationship with, and so you can call and then say, my ceiling is having a leakage, come and fix it for me. A lot of people have structural limitations to being actively able to get their landlords to actually deal with some of these things. So there have been several reports. No, hold on. There have been several instances where renters, either in the vast majority of instances, have to deal with repairs themselves, or there are significant instances where just because they don't want to go through the process of going through reporting it, making sure that they have the right documentation of it and all of that, just decide to do it themselves. So I'm not sure the repairs thing is a black and white situation, but also note that repairs in themselves increase the valuation of that house. So in itself, when you are repairing in instances where you have to, it does increase the valuation of the house. And I'm not sure why that is necessarily a bad thing, right? Or a downside of owning a house.
Okay, so I have a very simple response. If you have
Okay.
a landlord who charges you for the repairs, get a new landlord. I think it still counts to the flexibility arguments which renters do have. This is an option which
Yeah.
homeowners would never have in the first place to do so. I think as much as there are corporate landlords and bad landlords out there, there are also good ones, and there are also smarter renters who would now also, maybe after your first year contract that happened to you, your next year contract, to make sure that any contracts that you sign, you have an agreement in terms of the repairs. Is it one which you can shoulder? Is it one which you cannot? So, but I
But you
think
see,
on the comparative,
you are skipping the
on,
downside here, because you're
no, I'm
essentially
coming.
just saying get a new landlord.
No, but so I'm coming. I think also on the comparative, the
Yeah.
like the repairs that homeowners need to deal with is one which they can't escape. On our side, there's the optionality to put it on the landlord in the first place. On our side also, any kind of repairs which you need to, because you need to consider that the term period for renters is very different for that of homeowners. So, like I can live
Yeah.
with a broken ball because I'm going to live there for a year and I can change the house. Maybe I don't want to repair it or do anything like that. That option does not
Yeah.
exist for homeowners. The scale of investments in maintenance is far bigger because they are going to have the gardens, they are going to have the pools, they are going to have the big staircase and other things.
Why?
Second thing, I'm
Why would a
responding.
homeowner
I'm
need
I'm
that?
I'm responding. So second thing, you say that repairs is going to increase the valuation.
Yeah.
First of all, that is contentious, right? But even if first of all, that is contentious because actually repairs or initial things breaking down means that the house in itself is not sustainable and can affect the valuation quite negatively, especially if it is parts which are completely different. Like it can affect the aesthetics of the house, it can even affect the way in which people do view these things. And it also depends on the quality of repairs. But then, even if I was to concede on that point, this is money that you do not see. I don't as much care about the valuation of the house, especially when you consider all of the other arguments I've made as to the compressing effects that valuation is going to face by the time that you need to have that money in your hands.
Awesome. So I think that segues clearly into the second thing about the not having that money translating into liquid cash that you can use. First of all, I want to use this to push back on your comparatives of storing this money, which is clearly investing in high return, like making high return investments. Like a lot of these high return investments are not instant cash available that you can easily liquidate and have access to. Like there are different investment plans, especially the most like I do a lot of investments, Erasmus. Shaking your head is not it's not a response. But the most profitable investments are the ones that you commit over the long term. Why? Because the banks also need assurance. So any investment that allows you to withdraw your money very, very quickly is most likely low in benefits and returns. So if you're talking about high yield investments, there are at least investments that require you to commit your money over the stretch of a year, 2 years, or something of that sort. Some even go as high as 5 years to commit your money in order to get the very high end of the returns. Obviously, translation into quick cash is not a consideration for anybody looking to build equity and wealth. So, on your side, I don't think that the people need quick cash for them to make the investments. Similarly, on my side, I don't think the people need quick cash to want to buy a house, right? Secondly, people with the capacity to make this kind of investment or this kind of down payment of all the initial upfront costs that you talk about are people with the capacity to do so. And obviously, buying a house is not like something that you just get up and do. People plan over the stretch of a period to engage in this. So people understand the conditionalities that come with the decision. All I'm saying here is I don't think the ability to translate this into quick, instant available cash is a consideration that should be weighed on one side, because either way, unless the money will be sitting in the person's bank account on your end, then I don't think that the person has access to instant cash either way.
So I first of all want to debunk the claim that people don't need access to instant cash, because I think it does underscore
I never said that, Erasmus.
I think it does underscore the claim that I'm making here for renters,
Okay.
because I think we can both concede on both sides of the house
Yeah.
that investments can go bad, right?
Yeah.
But my claim is that when investments go bad for the homeowner, the ability to be able to adapt is far less than a traditional renter, someone
No,
who's
you think
putting
I
more
disagree
money.
with that?
But let's do some maths over here. I think it's interesting
Hold
to do
on,
some
before
maths.
before the math, right? Before the
No,
math. I
but
just want us
I
to
need
clear
to
this.
respond.
I just want us to
No, I
clear
need to
this so you go
respond.
to the math.
No, I need to respond. It's very
No,
important
this
that I
is also
respond so that I
aiding
don't
your
lose my train of.
response. This is
No,
aiding
because it
your
will lead me on a
response.
new path. I've already thought of a response to your first claim. I need to
Okay.
complete the response.
Go ahead.
So, like, think of a normal person who, for example, has to rent in maybe Accra, Tokyo,
Yeah.
London, or anything of that sort. This would be
Yeah.
your average young person, right? This would
Yeah.
be your average young person. And this average young person may have different life priorities. They may
Yeah.
now want to be entering into marriage and other social responsibilities, which sometimes do require investment. They may now be giving birth to their kids, etc. I think the commitment to raise that initial capital in the first place
Yeah.
is huge. Is huge, for which they will need to sacrifice on most of these things, and that's how come you find that a lot of young people who have aspirations to buy houses, etc., delay on most of that. That has a ripple effect on the state, etc. But let's say fuck the state, right? We don't care about the state for now. We care
Okay.
about our own selves. I think that this person displacing their desire, the specific shift of their desire in itself, is not good for them. So I think that in those moments, liquidity is very, very much important to be able to deal with life's issues and to be able to participate in the full spectrum of life in the first place. And I think those people do require liquidity. I don't think that the argument of, well, long-term investment needs to be this. I don't want to go into the what do you call it,
You
the
won't want to
naming.
go into as well.
No, no, I'm coming. I don't want to go into the naming of specific investments here and there, but it is
Okay.
not true that for the investment to be worthwhile, it needs to sit there over a large period of time without you
Most of
touching it.
them, it
In fact,
was a
in fact,
statistical claim that most
in
of them.
fact, that in itself, even if over time, let's pretend comparatively, you still put your money in there and you let it grow over time,
Yeah,
right? And no one touches it, and you don't have the immediate liquidity to go. I think the
yeah,
endpoint argument still stands, especially at the point at which your investments can mature and you can instantly receive it.
yeah,
On the comparative, the house buyer needs to continually pay for mortgage costs in that very beginning. They,
yeah,
they need to continually pay. The renter does not need to pay monthly costs. In fact, their money compounds and they do receive interest, which is always higher than the borrowing rate. So the second thing is that they do not need to pay for repairs, maintenance, which is less cash, which is going in there. And this is all money which they can enjoy to be able to take care of their lives. Thirdly, compound interest would mean that the rate at which their money increases over time is far larger than someone who necessarily put this money into a house who is paying off a debt or a loan. This debt or a loan that you are paying off over a long period of time does not necessarily mean that you have more money, especially at the end when you have a very, very, very illiquid asset for which, when you need to make it liquid, comes with additional cost, which puts further depreciating pressures on the money.
so I think we are nearing the end of this, and I like the fact that we are
But I'm not
moving
asking my
through a
questions.
lot of the. No, I also like how we are moving through a lot of the like major points of disagreement, right? And
Yeah.
the main thing I wanted to point out here are probably two things. The first one is I think so far you've been arguing on the fact that high-end investments are secure investments. And I think that's a fundamental flaw in the way in which investments work. The risk
I,
associated
I don't
to
want to
investing,
I don't want to interrupt you, but just quickly over there, I think you're
yeah,
also operating on that same assumption that
no, no,
house
no,
prices increase over time because there are market
no.
cycles which can also mean the
So,
value of a home
so
would also depreciate.
for instance, my claim has never been that house prices increase over time. You can check since we started this conversation. My claim has been the fact that if I'm paying something over time, as the person paying, I pay less in the end than the person who is renting. And the fact that in that end state, I get equity in return, whereas the person who is renting, even though they end up paying higher, doesn't get equity in return. Secondly, I'm now about to comment on the safety, the safeness of housing as an investment, which you are relying heavily on some assurance that these other alternative forms of investments, which are liquid, movable, all the terms that you put on it, are much more secure. And I don't think that's true. Like the risk level and the fact that those assets, the mere fact that those investments tend to be higher in terms of returns, usually also means that they come with higher associated risks. So it's on both ends. The pace at which an investment in a company would drop, like we saw Trump tariff, and then I lost thousands of dollars in split seconds, Hong Kong dollars, by the way, in split seconds, just because, just because,
Rich
like
man.
Trump passed a policy. I don't think that same pace, right, and the quickness. This is not to say that housing as an investment never depreciates, but I think that the quickness with which you lose a lot and the margins to which you lose is far risky on the end of other forms of investment into companies, stocks, buying bonds, buying what do you call it, packages and all that, and investing in those instances. So I do not think that you get the same level of safety. And as you know, with investments, the higher the safety, usually it also means that the lower the end return that you get. And I think that in terms of financial stability, I would prefer a much safer investment that guarantees me a higher likelihood of retaining a decent amount than a less safer and much more risky investment, even if it guarantees you a higher level of return. And I think we'd have the conversation about where people should invest, which is one of the debate topics that we would have. But I wanted to
Yeah.
point that out and clarify.
Okay. Thank you. So
Um,
I first of all want to say that on
yeah,
both levels there should be a level of good faith with
yeah,
regards to the outcomes which we want to have. I'm aware that the value of whether you invest or you rent, or you whether you invest and rent, or whether you buy a home and put up in equity, is still very, very much dependent on the individual. But I
yeah,
think you set the frame quite perfectly, that this is a person who is ready to invest. And
yeah,
that means the person has capacity. And what does that mean? It means that they have a level of average financial knowledge to be able to know the different
yeah,
risks
yeah,
which
yeah,
come,
yeah.
and to be able to taper it off. So I
I
think we
am
can
I am
all,
advising based on the
no,
risk
no, yeah,
levels,
I think we can all
obviously.
guarantee that. But I think
Yeah,
the second thing for me is that you set a false dichotomy here uh, with investing in a home, or
yeah,
buying a home, and the returns which comes as a result, versus you doing a casual investing when you are renting. And the reason it's a false dichotomy is that those ranges of investing is also available to the renter in many ways. Like, for example, they can choose high yield investments like Bitcoin, Forex, things like that, or which is very, very risky, or go for stocks, which are moderately risky, or guess what? Still invest in homes. There are a lot of opportunities to still invest in the real estate without necessarily owning a home. So all those options in terms of stability are still available to the renter, and is one which they could choose. So I don't think there is a specific trade-off which they necessarily need to make at that point. And we could, like I said, we could go band for band comparing
yeah,
that investment. But I think the key thing for me also over here is that then the level of diversification which can come with the renter is far, far bigger than the one which can come with the person buying the house. Why?
yeah,
You get safety all of the time, but you can't guarantee that safety is the best framework or metric by which someone should look at. Because when you are young, you want to take advantage of opportunity. And I think the flexibility on our side means that when individuals see the opportunity, they can take advantage of it and have the upside. And when there is threat, they can also moderate it to be able to get the safer side, instead of just being locked in safety. Because we talk about Trump's tariffs and it reduce your stock, that's fine. But what about the 2008 financial crisis? What about the recent housing crash within the UK? I think both the up and down sides can't necessarily happen, but the diversification risk is less on our side. I want to now ask you,
yeah,
on the basis of this, what if as you are living in this house, like as a young man, you decide, okay,
yeah,
now I've settled down to marry, I've saved up enough money, and I've bought my home. I have the safety, I have my life is good, everything is good,
yeah,
right?
yeah,
Now, what if, because of that safety you've had a chance to build on your skills, now have 10 years experience in the job in which you are, and now there's a huge demand for debate coaches
yeah,
and debate operations managers like you in a
yeah,
different city, maybe in a different country.
yeah,
How do you access that opportunity? Do you think that the level of opportunity cost that comes in trading of that job to be able to have a house, especially
yeah,
because if you want to keep on selling it, these things can happen multiple times in your life, and of course the
yeah,
cost of having to sell it and do all of those things, which means you have to take a loss, things like that. Do you think the upward cost of foregoing these kind of opportunities is one that young people should be taking, especially in a global world, a globalized world, as of now, where moving into different countries to take advantage of opportunities is quite common?
yeah, I think they should, and there are a couple of reasons why I think they should. The first one is that I do not think that the cost is as insane as you are making it seem. Like the fact that I have to move to a different city to take up a job. First of all, if this is an opportunity that I'm obviously not going to be able to turn down, the upside of that opportunity should be extremely high. right? The fact that maybe it's going to triple my earnings or even double my earnings, the fact that it brings some packages that are just too good to ignore. And so I'm going to make that shift and move. There are options of getting back my money with my house. There are rental options where, especially for city, a lot of the areas that people live, rent is always on, almost every
Wait, so
single
you
time
pay
people are
rent
looking.
whilst you're paying mortgage?
No, but you see, that's a question that you'd tend to have to ask depending on the stage at which that housing is.
The
Am I
renter
then
doesn't
paying
need to
for it?
ask that question. The
No, no,
renter
no.
doesn't
Hold on, hold
never
on,
need to
hold
ask
on,
that
hold on,
question.
hold on, hold on. But if I'm paying rent and paying mortgage, that's even easier, especially if I'm leaving the house and renting it. I just use the rent I'm taking to pay the mortgage. I do not think that the scenarios of it is as cut and dry, loss, gain, as you make it seem that if you are a renter, then you just leave. Because guess what? I also know a lot of renters who are, let's say, I've seen a couple of people like that in Hong Kong who are advertising their homes that they rented, and they rented it for what? They signed a new deal for like 2 months, and they need to move because they've got a huge job opportunity. But their contract says up until you live there for what, 15 months, you can't move. If you are leaving, you have to pay because. And note, landlords also build in standard contract demands to ensure that they are not always on the run looking for new people to come and stay, right? And so what that means is that you also face a certain level of that risk when you rent, that sometimes you either have to pay off, or that room would sit empty and you still be paying for it, or you have to go on a hunt and look for people to come and then pay off that money so that you get a new person to stay. Either way, a lot of the time, that level of work upfront that comes with looking for someone new to take up that space sometimes happen on both ends of the spectrum. So I think if the opportunity is too good, it's fine to leave, especially for somebody like me. I think that, especially in the space where you choose to buy a house, most likely you know that there's a long-term economic commitment that you want to come back to, for which reason you are making that statement claim to property ownership within that country, and it's a good thing to do.
Okay. No, I'll just say that, like, for me, the fact that renters don't have to ask that question at any time is a huge plus for them. Like, even if they need to make that consideration, the level of options with regards to flexibility, like, for example, kind of contracts that they draw up, exit clauses within contract, finding friends to take up the remaining part of the contract, or, like you said, if it's 2 months rent, the ability to forego it, compared to someone who is desperate to sell a house, who most likely would be selling at a loss
Yeah, yeah.
anyway. Will be selling at a loss anyway. But and
See,
also think about all of the initial capital which
I
they have put in the beginning.
agree.
But anyway,
I'm only pointing
let me
out that
let me
I don't
ask
think that
let
the
me ask my
option,
second
hold on,
question.
I don't
I
think
want
that
to
the
ask my
option for
second
the
question.
person is to sell
So
the house. I'm just clarifying
so
that I don't think that the only option available to the person is to sell the house. There are
if
lots
you
of
want
other
to rent
options
the house,
available
that
to the
comes with
person.
you wanting to manage the rent for someone.
Yeah, I'm
If you
fine
want
doing
to
that.
sell
You
the
asked me a question. I'm fine doing that. That's fine.
and I'm saying renters don't have to think about that. Okay, let me go ahead and ask the last question, and then
Okay.
we can conclude. The average maintenance cost for a home is between 5,000 to 6,000 pounds in a year, and
Yeah.
this also does keep rising. You said that for some number of renters, they sometimes need to pay some maintenance costs and etc.
Yeah.
But comparatively, I don't think they will be paying this huge level of this huge amount of it. And we've known that for a lot of people, this has frustrated them into not liking their homes, the quality of the home in itself decreasing, etc. Do you think that as a young person, this is an additional burden that needs to come, and take and keep in mind that in order for you to even get on the property ladder in the first place, the kind of trade-offs that you're already making is buying a house which is probably not in the greatest of areas, or buying a house that is not like the most elegant or the most well maintained, because you are hoping to be able to get on the upside of it. So I think young people end up debt trapped in their and getting house poor, and making sure that all of their budgets goes into um
You see,
the repairs in the home.
this is one of the classic instances where you pick and choose when to like rely on the parameters in the debate. So, for instance, when you're asking me the first question, you say, "Well, these are people that I said have the capacity to buy," or you were answering one of my questions, and then you said, "These are people that I said have the capacity to buy and have the capacity to make the financial decision." Then all of a sudden, in this question of yours, it's down to two very lean parameters: young people, who I'm not sure the category of young people you are referring to, and then people who are going to be debt trapped and house poor. Like, obviously, these are people who are making financial decisions outside of their capacity and way beneath, way above them. They are in, like, they are.
Hold on.
Yeah.
That doesn't discount the argument, because if that
No,
also
I'm going
works
to
on
answer
the
the question.
comparative,
I'm going to
it
answer the
means that
question.
if you have financial capacity and you are not
Uh huh.
having to make these commitments, you
Uh
can,
huh.
for example, have more money on your hand and be able to invest in stock some, or even pay your kids' school fees. This money that would have gone here. So yes,
See,
maybe I
I
was
think
playing tricks. I ignore all of that. What is your answer towards this growing debt, which you necessarily need to deal with, whether you have money or not?
you see, I think this is the fundamental misconception around mortgages. The fact that it is money that, on the other hand, you wouldn't have had to pay. Like, a lot of the time, you would have still been paying a decent amount of rent anyway. There's just probably a little difference between somebody paying a monthly mortgage. If I'm paying, let's say, £1,000 a month mortgage, and someone else is paying £700 a month rent, that's £300 difference. Unless you are saying that that £300 difference is what transforms your life over the course of the period that you are paying the mortgage, knowing very well that you are paying that £700 and getting no equity in return, versus me paying that £1,000, and in the end, I get to, let's say, I even get to recoup just £500 of that when I sell that house. That's an upside on my investment versus you who paid £700 and got nothing in return. So I think that the fundamental approach to analyzing the financial commitment to mortgages should not be from a point of you are paying something you wouldn't have paid. Is you are paying an additional cost on what you would have been paying on rent, but now towards the payment of your home. But also note that there's a lot of the rise of new companies having rent to own models where you directly pay rent and it's not necessarily a mortgage that comes in debt, but you pay rent, and over like 5 to 10 years that house
The
becomes you.
classic middle
All those,
ground.
no, all those options are there. This is not a classic middle ground. These are real options within the real estate market, right? So I do not think that you should view mortgages that way. I think people should ask themselves a fairly fundamental question: can I commit to that extra 300 every month? And if I can, in the end, even if I make a loss on this sale, but then it means that I recoup 500 of every single month rent that I paid, or every single month mortgage that I paid. Is that a fair financial return compared to if I was paying 700 and didn't get to recoup anything in return? And I think that probably gives a much more practical approach to evaluating the mathematics of it. But yeah, this has
Okay.
been a nice debate, by
Yeah.
the way.
Yeah. So I think, yeah, for me, like in terms of like closings, not to make more arguments, I
Yeah,
think this conversation is very interesting. I think we both got interested in it as a result of Steve Bartlett's
yeah.
guests, the number of guests that he's hosted who try and make the argument for rent versus
Rent, pay,
buying.
and
And
different people making
almost,
different arguments.
yeah, almost all the time we go in there and like people are making the comments and arguments from their individual perspective. So as
Yeah.
debaters, it feels nice to put ourselves in the shoes. It doesn't mean that I'm for renting as a political philosophy. Someone will say, perhaps I'm
Erasmus doesn't.
socialist.
If you go and buy a house, they will come and say Erasmus went to buy a house, but he
Yes.
advocated here that you should rent forever.
So these do not represent any of my views, but I think
Yeah,
it's very interesting. I think even on your side, like I can a lot the equity argument I thought was very, very powerful and very, very strong. I think the way in which some people also make the argument to say that in your old age, your capacity to then have money to be able to
yeah,
continue paying for rent decreases. And if by that time
decreases.
you already own the home, you just enjoying it. It's not about liquidating it and it becoming
Yeah,
money. You just enjoying it. It's far more valuable rather than having to come up every month with money for
that's
rent.
true. That's
So
true.
yeah.
I mean, for me, it was really nice, especially to look at the what that money could have been used for in alternative investments, and also avoiding like a lot of the rolling cost that comes with owning a house. And I think that's the fundamental flaw people make when trying to buy a house. They look at
Mm,
how nice the house is, how much I'm paying now, and forget about the fact that maintaining a house is probably over time the most expensive part of owning the house, right? Because maintenance never goes away. And if you don't take care and you don't maintain it properly, then when you have to sell as well, you lose out in terms of the amount of money that you
Value.
end up having. So I think this was a really nice conversation. And the fact that, like, look, both of us just picked sides randomly and we
Yeah, we
decided
didn't
to
even prep. We
decided to
didn't even
look into
prepare
it
the argument.
and have arguments around it. So it was nice and wading into this conversation. But ultimately, I want like people who are listening to this or people who've watched this to this far to let us know what you think in the comments. What do you think about renting versus owning? Do you have different thoughts or different ideas that we've not shared so far? But ultimately, you can leave us a like and let us know who won in the comments. Do you think that after listening to this, you are persuaded by Erasmus or persuaded by Andrews? And just to be clear, know that you are voting for somebody who is not a debate coach in
Andrews,
Erasmus
do
versus
you,
somebody
don't
who
go
is
and
a
share this
debate
to your
coach
kids and ask
in
them to
Erasmus.
vote for you.
Anyway, my
Don't go
kids
and
had
share it
already
to them.
been nagging me to do something like this. So as you know, the votes are going to be very interesting. But thanks, guys, and see you on the next episode.